Hi everyone, I'm Chad Shoop, the editor of Automatic Profits Alert. And today I wanted to point out that Automatic Profits Alert is a seasonality-based trading service. So I'm studying seasonal trends in the stock market on a daily basis, looking for opportunities to create a profit. But right now we're probably in one of the most commonly known seasonal trends in the stock market, and that's the historically weak period from May through October. It's historically weak and so commonly known that it's coined sell in May and go away. And almost everyone has heard of that. But today I want to flip that. I think right now is a great time to buy in May and then probably look to sell in October and November. And I came to that conclusion after studying every year for the S&P 500 going back to 1960. I looked through every single year, and what I was looking for was a 10% correction in the first 4 months of the year. So I wanted to find something that was very similar to what we just went through. And I went through all of that data, and it ended up happening about a third of the time. So about 30% of the time, we had a 10% correction in the first 4 months. And so then I looked at how May through October performed, and the conclusion there was that it really didn't give us any indication on what to expect. The returns were flat and the win rate was flat. So it really didn't give us any edge on what to expect coming up from May through October. But 1 year stood out to me, and that was 1997. So I looked at it when I was going through the charts, and it just, as I was scrolling through, I started in 1960 and was just scrolling forward, looking at every year in the S&P 500. And that 1997 period reminded me a lot about what we're seeing right now. And that's that, over the last 5 years or so, the S&P 500 has doubled. And that's what we had back then. Over the last 5 years, going up to 1997, the S&P 500 had doubled. 1996 was a very strong year for the stock market, and then it went through a correction in the first 4 months. But that May through October period was very strong. The S&P 500 jumped 17%. So I think we could see the exact same thing play out this year. I looked at the correlation analysis from 1996 and 1997 compared to 2017 and 2018 over a 14-month time period, and it was in the 90th percentile. So that's a very strong correlation, but I know that correlations can eventually come unglued and that it won't necessarily stay correlated to that same time period. But to anticipate that, I want to use what I showed you on the chart of the day from Friday when I'm studying the key levels on the S&P 500 as far as the way to trade it going forward. So if it breaks below the key support level that I showed you in that chart, then we'll look to get out. But as long as it stays above that or breaks above the resistance level, then I'm all for jumping in now and betting on the stock market to rally over the next few months. So if you got out at any time during this recent stock market correction, could have been at the top, at the bottom, or somewhere in between, and you went to cash or you took some money off the table to look to reinvest it later, now's that time, I think. I think right now we're on the cusp of a major breakout in the S&P 500, and from now to the end of the year, we could see a 20% rally or more in the overall market. And if you're picking the right stocks, then you could really see a significant gain over the next several months. So right now is a great time to get invested. We'll just follow those key levels that I showed you on Friday from the S&P 500 and be ready to benefit as stocks continue to rally. Well, that's all for my video today. If you enjoyed it, be sure to subscribe to our page and continue following us. Until next time, I'm Chad Shoop with Automatic Profits Alert.